Hey everyone, so in this video, I wanted to talk about how I plan to trade for each day and how I find the daily bias. I usually trade based on the candles and price action, and it's actually very simple. I look at each individual candle and I figure out which direction it wants to go. And so I go into the very basics of how the candles actually move. And I feel like a lot of people are too focused on just trading setups and they're not actually looking at each individual candle and what story they're telling. And people are just focused on the key levels and the zones, and they kind of miss out on the direction of the trade. So before I plan anything on the 1 hour or when I'm placing the trades, I always start from the daily chart. And right now on the left right here is my daily chart. So when I'm looking at the candles, whether it's red or green, I always have to identify where the candles open and where the candles closed. And then I also look for the highs of the candle and the low of the candle. So if I'm starting to look at this giant green candle, let's just say this whole thing didn't happen on the right, and let's say this is the previous day's candle, and I'm looking to find out which direction the market might move. So when I'm looking at this one green candle, I always mark the high and the low. So by doing this, I know that from the previous day, the market opened up at the lower level and then it closed either at the highs or near the close. And because this is a green candle, I know that the price started from the bottom to the top. And same thing with the red candle. If it's a bearish candle, I mark the top and the bottom of the bearish candle. And in this way, I know that the previous day the market opened up above and then it moved down. So the direction of the market is bearish, it's moving down. So it's very simple. Opened up here, because we opened up here and we closed right here, the way that I see it is that the nature of the price will either do the following. Because it closed here, it's either going to continue its trend down, or it's going to hold at this level, and if buyers wanted to hold it, they'll hold it and then they'll push it back up. So I always have two different setups for each. So I always have two different setups for each candle. So after I've marked my high and the low of the daily, I always go to my 1 hour, and because this is the 1 hour, because the 1 hour is where I actually plan to find the key areas. So the levels on the daily aren't actually my key areas, but it's just a sense of direction so that I know where market is going. So looking at this area is a daily candle that I marked. So we basically opened up here at market open, and then we closed right here. So what happened was, during the Asia and London and the pre-market, as soon as the market opened, the price held at the low, and instead of continuing its trend, it moved up. It made its retracement back up. So that's what I look for before the market opened. So before the market opened at 6:30, the candle is right here. So now I set my plan. Because the market is gonna open around in this area, and we were in a downtrend, the story that I know is that it held daily and then it moved back up. But because we're in a bearish trend, we might reject back here because we're in a downtrend, or we might continue above. So that's what the candle story is telling me. So that's the plan I have for the market open at New York session. Now that I know that the price has retraced back up from the bearish candle and we're opening up in the middle, if the price is going to continue, either it's going to move directly up at open, or it's going to hit some key level and then bounce back up. Or if that fails, it's going to move down. And the way I find these key areas is I use supply and demand, and I also use support and resistance. So for this trade, this entire area, because we were in a downtrend, could be supply. And areas like this can be the demand or the order blocks. So there's a possibility that the price can hit these order blocks and then move back up. Or it can hit this supply and then reject down. Now, because before the market opened and before the 6 a.m. candle, I know that the price is already trading inside the supply, which tells me that this entire supply is not as strong. So I'm leaning more towards bullishness. But overall, the market structure, if you look at the daily, is that the direction moved after holding this area, it moved back up. So the point that I'm trying to tell you is that if you try to identify the direction by each candle, you will see the direction of the price. And same thing for the next green candle. Let's say this candle, high, low. So either price is going to, because this is a bullish candle, either price is going to continue up or it's going to reject and then fall back down. So this was the green candle for the daily. During the pre-market Asia London, price tried to push up, trying to continue its trend, but it's obviously basing here and it's failing. So as the market opens, I have my plan. The daily is bullish, so if price fails to hold this level, it will drop back down. But if price can hold at the market open and then break higher, it will continue up. But as you can see, price failed to hold and then it dropped back down. Now, because we're in a bullish trend, I will look for key areas like order blocks like this, and this is exactly where the price managed to hold, fill in the orders, and then continue its trend. So since this was a bullish candle, if I'm looking to short for rejection at this level, I can either trade this area, rejection from the daily to the order block, but if it breaks this, then it will be another red candle, bearish trend all the way down, and it will hit one of these order blocks or key areas. But obviously it held at this level and then it continued its trend. So just to sum it up, that's how I go about each day. I always mark the high, low, and then I figure out which trend is going to continue. Because this was a bullish green candle, it's either going to continue or reject. So same thing here, bearish candle, it's going to either hold and bounce or it's going to continue its trend down. And you also have to look at each individual candle and to see what story it's telling you. So for example, for this bearish candle, although this was a bearish candle and the trend is down, this wick already shows that buyers pushed that up during the market. And this is where it closed. So during the Asia session, market opened up where it closed, and because bulls were holding the price, it's going to bounce and then continue its trend back up. And then at market open, it continued higher. This is how I figure out my daily bias for each day. So one mistake that I used to do is I would have my key levels, and let's just say I have key areas like somewhere here, or just anywhere. I used to be too focused on just trading the smaller time frame, and all my focus was, oh, I'll wait until price hits this level because this is demand, I'll go long. But if you focus on the higher time frame trend, like the daily and the 1 hour, and if the overall trend is bullish, I lean more towards taking bullish trades or bullish setups. And if it's leaning towards more, and if it's a bearish candle, I'll lean more towards bearish trade.